The stock market tenses up ahead of next week's Fed meeting. In today's cover story, foreclosures are spiking. Why is no one panicking? Plus, is Lululemon stock a downward dog after yesterday's big run-up? And the 5-day forecast is on the radar in Traders Unplugged. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Friday, September the 12th. In our first look, caution in the air. Stocks had marginal gains and losses Thursday. Gold fell $4, and oil had a big day, rallying $1.49. The U.S. and EU are set to impose a new round of sanctions against Russia today. Two British banks threaten to move headquarters out of Scotland if it votes next week to break away from the U.K. An insider trading probe expands to include hedge funds. Federal investigators are looking into communications between a Washington research firm and several funds regarding changes to the health care law. And it was an ultimate night for Ulta. Shares bounced more than 13% in heavy trading volume. The cosmetic store topped estimates and lifted its forecast for the year. Trader Bob Iacchino of Tethys Partners joins us now. Good morning, Bob.
Good morning.
How do you think that the Friday trade will shape up today with the geopolitical pressures? Retail numbers are coming out today, and the Fed next week.
I think the Fed next week is actually a little bit more important than the geopolitical pressures. I don't think anything in the Middle East is going to accelerate over the weekend. Given President Obama's speech on Wednesday, there was nothing really that new or nothing unexpected. Ukraine, Russia seems to be calming down a little bit, so I think today we'll see a little bit more of the same. You know, yesterday's close continued sort of a sideways trade for the Dow. We haven't been able to put together two up days since late August, so there's not really a lot of interest. I don't expect that to change today.
As you know, there's a glut of oil. And yesterday, oil rallied. What is it telling you?
So Brent and WTI, two different things. WTI is North American oil, Canadian and U.S. Bakken crude, things like that. Brent is waterborne oil that comes from overseas. The Saudi Arabians need oil to be above $90 a barrel, so we can dip below 100 on Brent, but there's going to be support. They're going to cut back their production. I think that up move yesterday was sort of anticipating some of that there's a dip you can buy in Brent. It's not going to be that satisfying, though, as you mentioned, glut of oil, and that's going to continue.
Thank you. Have a good trading day.
Thank you, you too.
Chuck Coppola brings us up to date now on sanctions against Russia. Good morning, Chuck.
Angie, pressure is mounting on Russia. Today, the U.S. and Europe will hit Russia with another round of sanctions over Russia's alleged role in the Ukraine crisis. President Obama says sanctions will target the country's financial, energy, and defense sectors. Europe will limit Russia's access to Western capital, freeze assets of officials, and cut ties with oil companies. Russia's oil and gas monopoly, Gazprom, has seen profits slide 41%. Russia could respond by extending its European food import ban to include cars and goods. That food ban has caused global food prices to sink to a 4-year low.
MasterCard is accused of charging fees that are anti-competitive overseas. MasterCard was investigated last year for transaction fees charged in Europe. The European Court of Justice is upholding a ruling saying regulators were right to condemn the cost of MasterCard's interchange fees retailers pay banks to process card payments. MasterCard says it will have little to no impact on operations. Shares fell $1.03 yesterday.
In today's cover story, more than 51,000 homes in foreclosure went on the auction block last month across America. That's up 1% from a year ago and reverses foreclosure's downward trend for the first time in nearly 4 years. The real estate information company RealtyTrack says that the August increase does not indicate the beginning of a new mortgage meltdown.
What's happening is that the banks and the court systems in some of these states, and again, it's not everywhere, are finally getting around to working through some of the foreclosures that were delayed by problems with documentation, by court rulings that found that the foreclosures were being done improperly, and by legislation in some of these states that changed the way the foreclosure process worked.
Despite scheduled foreclosure auctions significantly higher across half the nation, in Oregon up 117%, Colorado up 116%, New York and Connecticut up 81%. For homeowners about to reach this point, there are still options available, such as modifying their mortgage.
they got to try modifying. If they can't, see if they can do a short sale. Try to limit the financial impact and not getting into a foreclosure. If it ends up going into foreclosure, stay in that property. Still try to work with that bank. Maybe you can rent back as well. Some banks are making that an option to some homeowners.
Now, cities with rising foreclosure rates over last year include New York and Washington, D.C., 18%, Baltimore up 12%, Atlanta and Philadelphia up 11%. In these and other cities, it's not expected to add significantly to the inventory of homes, but could impact prices.
This is one sign that the market's not as strong as maybe we thought it was, and it's going to take longer to get completely back to health. And for homeowners, that means, well, their value of their home may not go up as quickly over the next 6 to 12 months as it has over the last 6 to 12 months.
For buyers, this means more properties are working their way to auction where better deals may be found than on the traditional real estate market, but may also draw competing bids from investors.
Alcoa landed a $1 billion deal with Boeing. Alcoa will become the sole supplier of aluminum for jet wings. This new contract is the largest ever between the two companies. During the past year, Alcoa stock has taken off on the company's intentions to become a major manufacturer in the aerospace industry.
A new weight loss drug gains approval from the Federal Drug Administration, but shares lose value. Orexigen Therapeutics shed 10% yesterday. The company makes the obesity drug Contrave. Contrave includes an antidepressant. Labels will carry cautions for increased risk of suicidal thoughts. The drug will compete with weight loss drugs from Arena Pharmaceuticals and Vivus.
Hackers who breached Home Depot store registers may have left behind hints. The credit card stealing cyber attack could become the largest ever for a retailer. Bloomberg News reports Home Depot was hacked with a malicious software program disguised as antivirus software. A cybersecurity specialist believes the malware used on Home Depot was different than Target's. The report also says that Home Depot hacker code contained anti-American references appearing to be meant as a message. Home Depot has no comment on the speculation.
McDonald's is trademarking McBrunch. The fast food chain confirms that it filed for a federal trademark for McBrunch, but there are no plans, it says, to test that concept. Executives at the fast food chain have admitted, though, to needing new ideas. McDonald's initially applied for a McBrunch trademark in 2001, but abandoned the application. This week, McDonald's revealed its worst global monthly same-store sales in a decade.
Retail numbers out this morning are expected to show a small rise in consumer spending. Last week, Gap surprised Wall Street by posting a 2% decline for August same-store sales. A retail turnaround specialist predicts Gap may decide to go back to basics to improve its numbers.
I think ultimately what Gap should and most likely will do is sell Banana Republic to either a distressed or large private equity shop, and that will give Gap a little bit headroom on the higher end of the price spectrum. And then I think we're going to see a company that ultimately will also sell off Intermix, and then it will be Gap and Old Navy.
That was Margaret Bogenreef of ACM Partners. The CEO of Gap reportedly is attempting to maintain sales growth as customers remain cautious on spending.
Radio Shack is exploring rescue options. That leads off our retail earnings wrap. Radio Shack is negotiating with existing lenders, bondholders, shareholders, and landlords about a financial turnaround plan. The electronics retailer ended the second quarter with roughly $30 million. It started the year with $180 million. Still, the company is raising its outlook. Radio Shack shares rallied 9.5% to $1.02. Kroger had an outstanding quarter. The grocery chain exceeded expectations and raised its profit outlook. That stock gained 30 cents.
GoPro shares are on a thrill ride off of rumors of a new device. Its stock shot up to a new high of $70 yesterday before closing at $68. Analysts from Stifel say Best Buy and REI are planning to stock up on a new GoPro device due out before the holidays. GoPro makes wearable cameras for adventure lovers, but analysts see the devices going mainstream. Citigroup has raised its price target on GoPro to $70.
Pandora stock hits a high note after cutting a deal with BMG, the world's fourth largest music publisher. Shares rallied 3% Thursday after the online radio company revealed a licensing agreement with BMG. Analysts say BMG will gain higher royalties for songwriters in exchange for marketing and business benefits, according to Pandora. BMG represents songwriters who created hits for artists including Frank Sinatra, Adele, and Jay-Z, just to name a few.
Here's the economic calendar for today. Investors will hope for music for their ears coming from the retail sector. Export prices and import prices are coming out today, along with the Michigan sentiment number and business inventories. On the earnings calendar, Darden Restaurants is one to watch. Still to come, the index that is turning heads on Wall Street. And business picks up for the middlemen. Plus, Ski Lift, the stock that's moving on a mega merger in Utah. Stay with us. A merger in the ski resort industry is giving a lift to a stock. Vail Resorts rose 11% higher Thursday. The company appropriately trades under the ticker MTN. Vail Resorts is buying Park City Mountain Resort for $182 million in cash to form the largest ski resort in the nation. Part of that deal calls for 2,000 of the Park City Mountain Resort employees to keep their jobs. Ironically, the stock chart for Vail Resorts ended the session looking an awful lot like a ski slope. Bill Mahler jumps in now with more on mergers. Bill.
The middle market business, now we've talked about this before, they're basically companies that have revenue from $10 million to around $1 billion. You know, only about 3% of businesses are middle market, yet a third of private sector employees work for these companies. Turns out conditions are pretty good right now for a lot of these companies to change hands. Let's talk with Patrick Pollard. He runs the Chicago office of the private investment banking firm Allegiance Capital Corporation. Why do you expect sales, Pat, of middle market companies to, what's been happening, but to really take off?
They continue to take off, but I think the most important point is that the values at which these companies are trading at are at historic levels. That corresponds with very high stock market levels. You hear records being broken every day in the Dow and the NASDAQ and the S&P. That translates into the value of private businesses. And the fact is, there are more buyers than there are sellers. And we all know that Econ 101 tells us that when demand is greater than supply, prices go up.
And that's probably really jacked up because of those high valuations.
Absolutely. The fact is that you have corporate buyers who have trillions of dollars of cash and either have to return it to investors through dividends or through making acquisitions that grow the business. You also have the entire tranche of private equity investors who are basically investing other people's money for high returns.
Huge pool of that money as well.
$1 trillion looking for a home. And frankly, that money ultimately has to go back to its investors if it hasn't been invested within a certain period of time.
So they're looking for opportunities.
Absolutely.
Are there bidding wars actually taking place?
Absolutely. Valuations are extremely high. At the high end of the middle market, you are looking at double-digit valuations of cash flow. At the lower end of the middle market, where there often aren't even buyers, in this environment, we're seeing all kinds of buyers and at much higher multiples.
So we got this perfect storm condition right now. I can't believe that's just going to go on indefinitely. I mean, rates are going to be going up.
Absolutely. And you're exactly right. One of the main ingredients of the perfect storm is the very low interest rate environment that we're in, and the fact that investors need to have higher returns than the lower risk assets are providing. But as you know, interest rates will go up. What goes up must come down and vice versa. And when it does, we think that the window will begin to close. But right now the window is wide open, and it's really a great time to be a seller if you're an owner of a middle market business.
Patrick Pollard, thanks so much.
You're welcome. Thanks, Bill.
Coming up, yoga pants are hot on Wall Street. Find out the stock that has traders saying namaste. And in Traders Unplugged, how the White House affects Wall Street. Stay with us. Traders, take your positions. Joining us now for Traders Unplugged, Alan Nuckman and Jack Scoville. Round number one, Star Power with the NASDAQ up nearly 14% year to date. Some NASDAQ stocks are up more than 10 times that amount. Which ones are a play for you? I'll give you some names: Intermune, Pacific Ethanol, and Plug Power.
Well, looking at this sector, obviously they've been leading the way. I think it's more important not what you play, but how you play. Obviously, they've been leading the way. There's no give up on them just yet. But you have to use risk control because there's so much volatility. And if you look at some of those stocks that have made that top 10 with that extreme move, they haven't done so well over the past 5 years. So they have these big swings, which can be a worry.
I always find that if you do see a big move in a market, it's usually good to take at least some of that money off of the table.
That always makes
hurts.
sense.
It never hurts to take a profit, even if the market wants to keep going. There are other places to make some really good money, and maybe it's time to consider taking some of the money out of those and look for other plays.
Topic number 2, oil's well. Crude prices are at a 16-month low. How do you play oil here?
Commodities I do, and I'm still selling the oil. I always find that when commodities make a big move to the upside, as the oil certainly has done over the last few years, once it finally starts to turn, it turns and keeps on going longer than anybody expects. So
I'm leaning on this 90 level to cut you off here. 90 is the halfway point of where oil's been in the last 5 years, from 65 to 115. I think there's going to be some solid risk-reward support to lean on here at 90. I don't see it going a lot lower unless the dollar continues to go, which I don't know how it can continue at this continued pace.
Round number 3, Obama versus Reagan. Forbes.com came out with a report this week comparing the economic policies of the two presidents. Do presidential policies matter to the market?
That's what amazes me, is that people's ideology and politics get in the way of what they see in the marketplace. The market doesn't care if you're Democrat or Republican, regardless of who my guest is. They obviously make it more important than I do. To me, it's all about price action, and I can't believe that people have been fighting it for 5 years, and a lot of people have missed out on this move.
Well, I agree with that. I think a lot of people have missed out on this move, and I think you're starting to see some of the biggest losers start to filter out into the press, and they've been some of the bigger fighters against this move.
Here's your bonus round question. An early frost could hurt crops this year. How early are forecasters talking about a risk of frost? Is it the first week of October, last week of September, or this weekend?
We're talking this weekend, as a matter of fact. In fact, we had some freezing temperatures up in Alberta already.
Great job, Jack. It is this weekend with that frost risk. Good to have you on.
Thank you.
First Business continues right after this. Scott Bauer of Trading Advantage joins us on this Friday morning for Chart Talk. Good to see you, Scott.
Good to be here, Angie.
Lululemon shares rallied 13% yesterday. Should investors get excited about this stock, or is that a stretch?
You know, obviously, if you were in it before the earnings release yesterday morning, it was a great move. In fact, the open interest in the options and the call options from the 40 strike all the way through the 45 strike on the upside was unbelievable. So obviously it was a great move. But you know, I'm not so sure here. If you look at what they reported last earnings back in June, you know, they really lowered their guidance for the rest of the year. And this earnings, they upped their guidance by 1 cent. So, you know, I'm not so sure in the long run that the net of that is great, but obviously the short run move was pretty dramatic.
Scott, is much of the rally in Lulu because of the shorts in this stock?
Oh, yeah, no question about it, Angie. I mean, the short interest in Lulu is so high that when this news came out and the stock really started ratcheting, a lot of these people on the short side really had a scramble, and that, I think, was really part of what was driving the stock up as well.
Would you take a position in Lululemon?
I'm on the sidelines right here. I'm really concerned about the lowered guidance from 3 months ago, and then they just upped it by a penny now. That really concerns me.
What stock do you like? What are you eyeing?
You know, I really still like Apple, and I don't want to beat a dead horse, and I'm sure you've had, you know, so many people talk about it, but typically after you see the big Apple announcements, you know, it's more of a buy the rumor, sell the news type of thing. And I believe the statistics are, you know, in the week or two following the announcement, you see typically a, you know, 3% drop or so in the stock, and then it, you know, goes up from there. I really like Apple. I love what they did, not just with the phone and obviously not with the watch, but the mobile payment area. I think there is, at least through the rest of the year, perhaps a good 10 to 12% upside in Apple left.
I'm really surprised that you picked Apple. Thanks for coming on, and have a good weekend.
You too, Angie.
It's time for us to wrap it up for today. Coming up on Monday, happy birthday, Harry. Prince Harry turns 30 next week, and he's set to inherit big money. Our royal watcher will be here to explain the investment strategy behind Harry's millions. Thanks so much for watching today. From all of us at First Business, have a great Friday.